Thanks for joining us at XM.com. You're watching today's market comment by Raf Boyajian. I'm Christina Marujas. Wall Street staged a comeback on Thursday after suffering its worst day since September in the aftermath of the FOMC decision on Wednesday. There was no clear catalyst for yesterday's rebound, as neither the data nor the latest earnings offered a decisive view on where the economy is headed. The focus now shifts to today's employment report for January. A softening labor market bodes well for dovish expectations for the Fed, even if markets have to contend with the first rate cut arriving somewhat later than hoped. When combined with lower yields, there is little reason for investors to remain downbeat for too long. Disappointing earnings from Alphabet upset the positive mood midweek, but the sell-off was contained, and Thursday's rebound stands a good chance of extending today following stellar results from Amazon and Meta. Apple is likely to be a drag, however, as its better-than-expected revenue growth was overshadowed by falling sales in China and weak guidance for the current quarter. The S&P 500 rallied 1.3% to close above the 4,900 level, while the Dow Jones set a new record high. But if there's anything that can spoil this optimism, at least in the short term, it's today's Nonfarm Payrolls report. The U.S. economy likely added 180,000 jobs in January, and the unemployment rate is expected to rise slightly to 3.8%. Any upside surprises in one of the main components of the jobs report risk further pushing back the timing for a rate cut by the Fed. The U.S. dollar is headed for weekly losses despite Fed Chair Powell clearly signaling that there is no urgency to cut rates, with a slide in Treasury yields finally catching up with the currency. Sterling was also perked up after a very choppy session on Thursday following the Bank of England's policy meeting, which took a more neutral stance as it kept rates on hold but appeared in no rush to lower borrowing costs. However, investors were mainly surprised by the three-way split within the Monetary Policy Committee. The weaker dollar failed to lift gold prices on Friday, although a late rebound cannot be ruled out amid speculation the United States may carry out attacks on Iran-backed proxies in the Middle East over the weekend. Thank you for watching today's market comment here at XM.com.